Hi everyone, Drini here, and welcome to my channel. So on dumpy days like this, when Bitcoin and the rest of the crypto market pretty much shit the bed, I see a lot of people complain and basically scream it's the end of the world. However, days like this are one of the best reasons why I've really gone 100% in the crypto space. With crypto, you will always get the chance to come back in because when the market corrects, it corrects really hard. That is the one good thing about crypto. You will never get left behind. As long as you're patient and as long as you know what you're doing, you will always have opportunities to buy before the next leg up. So on days like this, I only have one non-financial advice. It's to buy the dip. So if you guys are wondering if this is your first time in the crypto space, when people keep telling you to buy the dip, you're probably always wondering what the hell does that mean? Well, these are one of the days when you're supposed to buy the dip. But that's a pretty boring day for me from a content perspective because, regardless of whatever crypto that we're going to look at, it's always going to be the same advice. It's going to be like, hey guys, you should have bought the dip here. So this is a good opportunity because the whole market is down to really start teaching everyone certain technical analysis concepts. I won't dump everything at once because it's a bit stupid. Instead, what we'll do is we'll talk about things as they come along and we'll do it in bite-sized pieces so that the message is better received. And when you have incremental learning over time, then you become better and better instead of everything gets dumped on you and then you forget everything 2 days later. So I will call this session Technical Analysis 101. I know, very original, right? And the first thing that I want to talk about is that I really want everyone who watches this video to understand market structure. Because if you've been watching my past videos, I always talk about structure. Structure. What does that mean? So there are a couple of things that you need to know about technical analysis. One, there's no such thing as secret formulas and strategies. Why is that? It's because when you're trading something, the beauty of charts is you see things in an open and transparent way. All indicators are available to everyone. All price action is consistent across whatever platform that you're looking at. So that's the first thing that you need to know. The second thing that you need to know is price action happens because for seasoned investors, seasoned traders, financial institutions, and even algorithms, we all adhere to market structure. Now, you may be wondering, why do market structures exist? Because at any given point, at any given price action at any given time, you have one of four scenarios that may play out. A particular price may be very high to incentivize a lot of people to sell at that point. You have a price action that will have some people want to sell at that point. You may have a price action that some people want to buy at that point. And you will have a price action or a price level where a lot of people want to buy at that point. So it's the interaction of these four scenarios. And it becomes a matter of how many people belong to each group, and that's how price action plays out. So now that you know these two things, so let's dive into SPS so that I can show you guys the importance of market structure and what happens when you adhere to it, when you break it. SPS is my best illustration because of this. Over the past month or so, vouchers are needed for the pre-sale packs. If you're part of the player base, you are incentivized to stake SPS. So out of the 300 million SPS currently in circulation, I think it's close to 200 million that is staked. There is a clean divide between the player base and the trader base because the amount of SPS that's currently staked, who do you think is staking that? The players. Among the remaining SPS liquidity, who do you think is trading that? That's right, you're left with the traders and the investors. So SPS is really a nice illustration. It shows a lot of trading principles at play and is one of my best examples when it comes to showcasing market structure. Okay, so enough talk, let's dive in. Okay, so when you're looking at a particular chart here, I think one thing that stands out is, of course, there's a lot of chaos going on. You may be wondering, how come there are giant candles when a lot of times you have small candles like this? Whether it's green or red, it doesn't matter. But you have small candles like this, but suddenly you have these massive candles right here. Why do they exist? And the reason for that is quite simple. It's because of market structure. So remember, everyone sees the same thing, and because everyone knows the rules of the game, they follow market structure. So you may see chaos here and you're like, it just goes up and down. But not really. This is what's happening to the SPS price action. So let's go through it one by one. First, let's address the question, why is this candle like this? Because one, we were forming a broadening descending wedge, but also adhering to this level of support. So this was providing a level of support and it was forming a descending triangle. When that happens, remember, everyone knows the rules of the game and the best ones adhere to market structure. So what's happening right here? People are placing orders to sell their SPS when a particular price goes below the support lines. Because everyone knows the rules of the game, they know that this is a key level of support. You break this support, you go short. That means placing a short order where you sell SPS when it comes to this level and you buy back SPS at a particular price. Everyone knows the rule, so everyone places the order at around here. And what happens? You break the structure, you go short. Now, let's move on to the next candle. So what happened right here? You were still in a broadening descending channel right here. And what happened was, after the break in structure, you found support because of some other candles to the left, which I will not show you in this case. But now what are we forming? We were forming a horizontal triangle right here. Everyone knows that we are forming horizontal triangles. What are they doing? They are placing buy orders at around the area where the structure will break. Once the price action broke out of the trend, what happened? Everyone, all those buy orders start getting piled up, and now you get a massive candle to the upside. Why? Because you've broken the trend. Also, everyone knows that when you have certain patterns, there are respective technical targets accordingly. In this case, there's a technical target for this triangle, which is around here. There's also a technical target for breaking this broadening descending wedge, which is where you started the wedge. So when people place their buy orders, they place it here and they sell right here. So when everyone does that, you get a market rally right here. And then you move on to the next pattern. So in the next pattern, after things calm down, because remember, you have technical targets, so people were starting to sell again, now you were forming what? A horizontal triangle. And with horizontal triangles, same rules apply, it can go both ways. So you can either go up and you have technical targets to the upside, or you can go down and you have technical targets to the downside. Once the market structure broke, there were sell orders right here. Why? Again, it's the same rules, same rule set. So this, once you broke it, technical target, and once the technical targets were met, it's because all of these limit orders or all of these sell orders had instructions that you sell here, you profit here by buying back in. And now you continue with the structure. So now we are on our way up, but unfortunately we were also forming what? We were forming an ascending wedge. And when a trader or a seasoned investor sees that it's an ascending wedge, what do? They place buy orders around here when you break the upper trend line, but they also place sell orders when you break this trend line. And once price has broken through, everyone knows that the price has broken structure, all the sell orders get piled up, now you get a downward trend to the downside. When it fell through right here, where did price play out? It now went on a broadening descending wedge again, and everyone knows that this is a bullish pattern. So when you broke out of here, you broke out of here in a strong manner. Why? Same thing. Buy orders were placed around here when the structure breaks and they get piled up all the way until a particular technical target is met. In this case, it was around this level because this is where the structure was first formed, and everyone knows that. So once the sell orders were placed here, what do you have? So now you have another pattern that was playing out, which has started to form a descending triangle. And same thing, when you have a descending triangle right here, where are the sell orders going to be placed? They're going to be placed below a particular support level, which is here. Once you've broken this structure, what do? All the sell orders get piled up and you fall back down violently. And finally, you had a broadening, ascending channel right here, which is a bearish structure. What happened when the markets dump? Everyone was placing selling orders on this trend line. When you break support, you go short. So everyone went short. And why do you think it stopped here? Because of support levels right here. Nobody wants to risk placing selling orders beyond this point because they know that this is a nice support area where a lot of people will start to buy. And that's it. This is why I always like to illustrate my technical analysis using market structures. It's not a secret. It's not a magical formula that makes me look prophetic or I have a crystal ball. What I'm doing here is I'm just sharing with you guys the rules that all of these seasoned traders, all of these financial institutions also know and understand. Another thing that I would like you to know is the markets are very complex. And the complexity is a good thing. All of these permutations create the market. That is the beauty of it. And one of the things I like about technical analysis is when people do it right, we focus on what the charts tell us. So the data is pure. The data is 100%. There's no need for me to promise 50 to 100x gains because looking at the data, if you know what to look for, is already exciting enough. So one of the conversations I had with one of my recent subscribers, he was thanking me because now that he know what to look out for, it becomes like cheering for a sports team. Because once you see the structure, then it's very easy for you to map scenarios. And then you start cheering. It's like, are you going to break it? Are you going to break it to the upside or are you going to break it to the downside? It's like, yeah, go SPS. I hope that it taught you a lot of things about the markets. And hopefully moving forward, what I want to achieve here is for every one of you to learn these things so that we can have very fruitful conversations in future videos. But until then, if you like this video, please like and subscribe. Also, hit the notification bell. So if you also want me to track certain gaming cryptos that you're interested in, just leave it in the comments below. So maybe I'll look at it. In the meantime, that's all for me. Bye-bye.